एक बैंक या एनबीएफसी को कैसे एनालाइज करें? हाउ डू वी टेल इफ अ बैंक और एनबीएफसी स्टॉक इज हाई क्वालिटी, एवरेज क्वालिटी, लो क्वालिटी? हाउ डू वी मेक दैट डिस्टिंक्शन? और इस क्वेश्चन को अगर आप किसी भी experienced investor से पूछेंगे, they'll usually tell you should analyze or track two simple ratios. One is ROA, return on assets, and the other one is ROA, return on equity. Now, what do these ratios mean? Let's try and quickly understand. ROA, return on assets, means net profit divided by the total assets. So, in simple words, for every 100 rupees of total assets that a particular bank or NBFC has, how much net profit it can earn on those 100 rupees of assets, right? Now, of course, usually the higher the better, right? But there is a limit on how much higher you can go, and you'll be surprised that even for the best banks, that are considered to be very high quality, HDFC Bank, Kotak Bank, ICICI Bank now, right, is considered a much higher quality than it was a few years ago. But all these banks, the upper threshold would be around 2%. So this is a very thin margin business, right? So that's, and usually NBFCs ka jo ROA will be slightly higher. It can sometimes go up to even 5%. In rare cases, even 6-7%. But that is the rough range, right? So somewhere around 1 to 5%. Most of the banks and NBFCs would fall in that range, especially the decent quality ones, right? If you look at ROE basically tells us how efficiently the business is being run in terms of what net profit the business can generate on every 100 rupees of equity capital, right? जो भी equity है उस business में, उस पे कितना earn कर पा रहा है business after the whole the whole cycle, the business cycle is being run, right? Or just to get a better intuition on this, we can compare this with an FD. So when we put 100 rupees in an FD, our return on equity, we can say, is around 5 rupees, assuming post-tax, removing the tax considerations, all of that, right? So from that perspective, we can say, okay, कि अगर bank FD में 5-6-7% मिलता है, तो by investing in a business, I want to earn at least much more than that. So usually अगर 15% का threshold अगर cross हो रहा है, तो usually that is considered to be very respectable quality, right? So this is how ROA and ROE, we can understand them, and these are the minimum threshold. But now the more important question is कि अगर सिर्फ ROA और RE देख लिया और वो past में देख लिया, so that alone is not very important information in terms of what will happen to our investments in the future, because we are investing for the future. To answer that question, what direction will the ROA and ROE move, right? Will it be sustainable? Can it increase from there? Will it decline? What are those factors that will impact ROA and ROE numbers, right? In order to understand that, there is a very simple but effective tool that analysts and investors across the world use to analyze banks and NBFCs. And that simple tool is called ROA Tree. It's actually a very, very simple tool once you understand the structure of the income statement. या फिर income statement कैसे काम करती है for a finance company. Once we understand how that works, I think it becomes extremely, extremely simple to understand. Now, a finance company, for those of us who might not be very familiar, their fundamental business model is very different from all other types of businesses. And the way it works is that a finance company will borrow money at X percentage, let's say 5%, and then it will try to lend it at a higher percentage. Of course, I mean, that's how they make money, right? So that's fundamentally how it works. And in this process, if we keep this in mind, we can very easily get to learn about the income statement and how the structure works, right? So when you lend money, of course, you're going to be earning in the form of EMIs, right? This is recorded on the income statement as interest income. Very logical, very simple. Now, because you have borrowed that money that you have lent, of course, you have to pay those people, institutions back as well. That is interest paid, very simple. And what we get is basically net interest income. Now, net interest income is a very, very important metric, या फिर very important checkpoint on the income statement that analysts track. And more importantly, analysts like to track the net interest margin, because net interest margin tells that, again, on every 100 rupees of total assets, usually loans jitne diye gaye hain. So on every 100 rupees of total assets, how much are we earning in terms of net interest income? Now, if over time net interest margin, right, that ratio, if net interest margin is expanding or increasing, it means that all other things being constant, the ROA will also increase, right? And that's exactly what we want, right? So that's the first key checkpoint in the ROA tree, in the income statement. that analysts track, and we as investors and analysts can track, right? Next, you have other income. Usually for a bank, it has a lot of different ways of earning fee income, छोटे मोटे यहाँ वहाँ से, right? For example, credit card fee हो गया, आपने balance नहीं maintain किया अपने savings account में, you have to pay a fee for that. आपका debit card खो गया, you ordered a new one. So a bank has a lot more flexibility to earn fee income versus an NBFC, right? So that's other income, usually fee income. And that, if you add that to net interest income, it becomes total income. Now, from this, now that we have all the income sources from this, then we deduct two major expenses, right? And the first major expense is, of course, the operating expenses. Now, operating expenses are extremely, extremely critical for a finance company because anyway, to begin with, the margin is so thin, right? 100 rupees ke assets pay, usually for a bank, net interest margin, even the best banks will earn around 4%, 4.5% at max, right? 4.75, like roughly around that range. So it's not a lot. It's a very thin margin business. And within that 4.5%, now you have to deduct all kinds of expenses, right? Your salaries, your investment in technology, your software costs, the branches, your expansion, all of that, right? You have to take care. So you have to be, to have a high quality bank and business, you have to be very, very efficient in terms of the cost. And one key ratio or one key driver that analysts track at this level of the income statement is the cost to income ratio, right? And of course, over time, you want that cost to income ratio to keep decreasing, right? So that's where we are at now. What we get, total income minus the operating expenses, we get to PPOP, pre-provisioning operating profit, right? Why pre-provisioning? Because it is before provisioning expense. And provisioning is perhaps the most, you can say, volatile and usually the most unpredictable expense that happens for a finance company, because the loans that you have given, right? Usually it's very tough to maintain a good asset quality, and the ones that can keep a good asset quality will usually have lower provisioning expenses, and usually those expenses will be kind of stable. So that is usually considered to be a high quality bank or NBFC, right? But either ways, provisioning should be as low as possible as a percentage of the total assets. Again, this is all as a percentage of total assets because again, we want to know on the overall balance sheet how well these numbers are working. And again, provisioning, you either want it to be consistent at a low number or you want it to decline, right? Then you have tax, and what you get remaining is the profit after tax. Now, profit after tax as a percentage of total assets is, of course, we discuss the key number ROA, right? So to get to ROA, right, to be able to say that in the near term over 1 to 3 years, ROA will increase or decline or stay stable is a factor, is dependent on these 2-3 key ratios, one being net interest margin, the other one being cost to income, the other one being provisioning coverage ratio. And by the way, all of this we'll use examples now to kind of understand it in a more in-depth way. So before we look at some really, really interesting case studies on how this ROA concept actually applies in real life, how we can use it to analyze banks and NBFCs, I just want to take a few seconds and request you that if you are watching this video so far, if you have found it interesting, please consider subscribing. Please click on the like button. It will kind of indicate to me that the kind of videos I'm trying to make, you are able to connect and you like these videos. Also, if you have any questions, feedback, all of that, comment section, please feel free to leave comments. Now, coming back to case study number 1, which is Federal Bank, right? Now, 2016 tak, Federal Bank in the last 5-7 years was performing pretty reasonably well, right? Its ROA was ranging between 1 to 1.25%. Now, it's not the best in the world, but it's not the worst either, right? And anything above 1% is considered respectful. But 2016 mein, because the whole infrastructure lending cycle kind of went, downhill, it had to start recognizing बैड लोन्स, मतलब कि जो NPA रेशियो है वो एकदम से ऊपर चला गया. एंड फ्रैंकली इट वाजंट जस्ट फेडरल बैंक दैट वाज गोइंग थ्रू दिस काइंड ऑफ सिचुएशन. In fact, the entire banking system was going through this NPA problem. If you remember in 2016-17, even अभी तक recently 18-19-20 तक जो NPA issues हैं पिछले 10 साल के, they were again and again in the news. So if you want to understand more deeply, like what exactly happened, what were the different factors, political factors, I mean, obviously economic factors, what were the reasons why banks kind of gave such a large percentage of loans that they were never able to get paid back. There's a very good book by Mr. Vivek called, excellent book. It's called Bad Money. In fact, I made a video book summary and I'll try to link it somewhere in this video. So please check that out as well. Now, coming back, so because Federal Bank now was all of a sudden high NPA, high provision, low profit, and therefore low ROA, it actually, its ROA reduced drastically in 2016. And of course, all the stakeholders now wanted to, all the investors, all the promoters, all the other institutional investors wanted Federal Bank to improve its performance. Now, performance, by performance, it means ROA वापस 1% ऊपर लेके आओ, कैसे, right? So the first lever, as if you remember in the ROA tree, and as you can see, the first lever that a bank can pull in order to increase ROA is the net interest margin. अब net interest margin कैसे बढ़ाया जाए, right? Net interest margin means basically the net interest income as a percentage of total assets, right? So in order to do that, of course, one way is that you increase the net interest income more than the interest paid. Right? How do you do that? Usually you will do that when you move on to like higher yielding loans. So loans or the types of loans that you can give जहाँ पे interest rate जो आप earn कर रहे हैं वो high हो, right? So that's one way to think about it, right? And Federal Bank decided that it is going to enter 3-4 new lines of business, right? One is it will start giving personal loans. It decided to enter commercial vehicles. In 2021 it started with credit cards, something it had never done before, and it also invested in other business related, say investment banking business and business related to capital markets, right? Raising funds and all of that. Right. So these are different types of businesses that it decided to enter to increase the net interest income without increasing the total assets as much, right? So that the net interest margin goes up, right? So all of that happened, and over the years it took 2-3 years for the bank to execute its strategy, and finally in 2021 is when the results started to show off. The results started to show up. And the net interest margin kind of increased to kind of like 3%, 2.9% level. So that was not a massive, but even a 20 basis point improvement is very respectable, right? So that was one lever Federal Bank was able to earn, and as a result, profit after tax increased, and as a result, ROA also increased. And as you can see in this graph, it went from 2018 it was less than 0.7%. It gradually increased, and in fact, in the Q4, in the March 2022 quarter, the ROA hit a 7-year high of 1.03%. And because of this, right, because of the shift in strategy, because of that strategy actually working out so far, the profit increased and the ROA increased, and the stock underwent what we call a re-rating, right, in the investing world. And when re-rating happens, the performance increases, and of course the stock price usually follows. So in this case, in the last 1 year, the returns that Federal Bank has given is around 51% as on 21st September. It might have varied a little bit by the time this video comes about, but you get the idea, right? Because of this increase in performance, the stock price has moved as well. Now, we cannot say that 100% of the stock price improvement was because of only performance, because there are a lot of, in the short run, there are other factors going on as well. So for the next case study, we'll focus on IDFC First Bank, and this case study we will specifically focus around the second most important lever in the ROA tree, which is cost to income ratio. Now, obviously goes without saying that because it is a cost, agar cost kam hoga, to profit zyada hoga, assuming everything else in the income statement is constant, and therefore chances are that ROA will also increase. So इस अंडरस्टैंडिंग के साथ अगर हम ये ग्राफ देखें आपकी स्क्रीन पे भी, सो वी कैन सी दैट बिटवीन 2016 and 18 cost to income ratio for IDFC Bank increased from around 40.8%, 41% to 56%, right, which is a big jump. Now, why did this happen? इसको समझ लेते हैं. 2016 के अराउंड, जैसे कि हमने डिस्कस किया, इवन इन द केस ऑफ फेडरल बैंक, जो द होल कॉर्पोरेट लोन साइकिल, जो इंफ्रास्ट्रक्चर लोन्स, बिग चंकी लोन्स, right, the whole cycle was going through a bust phase. और उसकी वजह से of course a lot of NPAs were happening and banks were desperately trying to kind of deal with the situation, but it was a very hard kind of situation to deal with because जब आप 10-10 हज़ार 20-20 हज़ार 5-5 हज़ार करोड़ का लोन देते हैं, उस केस में the resolution, the time it takes to actually get your money back if at all is a very lengthy process. And also 2018 तक तो हमारा इंडिया में there was no bankruptcy law only, so there was absolutely no legal recourse on how to actually get the money back from the bank's perspective. So given that context, IDFC Bank was going through a bit of a crisis, and they decided in order to deal with this crisis, we will start to focus on retail loans. At the time, retail loans was being looked at this, how do you say, the grass is always greener on the other side kind of situation, because har ek lender, right, was focusing on retail loans because retail loans generally us time pe, and even now to an extent, the NPA ratios were much less compared to the corporate loan situation, right? So that's why it was attractive. And secondly, the yields were higher. So when you combine the two, where you can earn higher yields, you can earn higher interest with relatively lower or more manageable risk, right? Of course, banks were jumping on the opportunity, and everybody was trying to go retail loans, right? So IDFC First also jumped on that bandwagon and decided that it will focus. Now, retail loans के बारे में एक interesting चीज समझना जरूरी है, which is that compared to large corporate loans, right? When you are giving out 500 crore, 1,000 crore, 5,000 crore ke loans versus, let's say you're dealing with individuals, which is retail loans, right? Personal loans, auto loans, all of that, right? Your operation cost for retail loans is going to be a lot higher, right? You need branches, you need people, you need to do marketing, you need to so the whole process is a lot more operationally intensive, right? And for this reason, in order to actually start building a retail loan book, IDFC Bank had to invest in branches. It had to invest in kind of sourcing current accounts and saving account. It had to invest in hiring more people, and that was one of the big reasons that the cost to income increased, right? Because cost to income increased, of course, it impacted profitability to a large extent, right? But obviously, the bank was looking at it from a longer perspective कि जब भी returns आएंगे things will improve. And then March 2019 तक, अगले साल, एक और बहुत ही important और key incident happened in the history of IDFC Bank, where it merged with Capital First, right, which was an NBFC focusing on retail loans. And I'm sure many of you might have heard about V. Vaidyanathan, who is now the CEO of IDFC First Bank. So again, keeping in line with IDFC Bank's strategy of going more retail and focusing on retail, it merged with Capital First. Capital First wanted a banking license. It wanted to kind of, play in the big league, and that's why the merger happened. As a consequence of the merger, of course, as you can see on the graph, again, that the cost to income ratio shot up like to 145%, which means that basically operating cost was more than operating income, which means that there was a loss, right? Again, why that happened? Because all of a sudden the management, the new management or the combined management decided that it will focus even more, go even more hardcore on building the retail operations. So in fact, the operational expenditure that increased from nearly 1,650 crore to 5,800 crore between March 18 to March 19, and that's why you see this huge jump. Of course, ROA went for a toss, and as you can see on the screen now, ROAs were -2% or whatever, just a ridiculously low number, right? So that was the situation that happened with IDFC Bank, why cost to income ratio increased and how that impacted ROAs. Now, interestingly, मजे की बात है कि these investments in new branches and higher CASA sourcing and getting more deposits from individuals, blah blah blah, it actually led to significant improvement in one or some of the ROA levels. For example, net interest margin. और जैसा आप देख सकते हैं स्क्रीन पे, the net interest margin improved from 2018, it improved slightly, 2019, 2020, more improved 2021. So it has been consistently going up, right? But it's not enough, because the other two levels, which is the operational expenditure या cost to income ratio के through देख सकते हैं उसे, and provisioning, right, which will be our next case study. So those two levels still were way too high. And I think this is a great example of how it's not just one or two levers, it's a combination, the net effect of all these levers that obviously impacts your net profit and therefore your ROA. In the third case study, let's take the example of Bandhan Bank and take a look at the third key lever for an ROA tree, which is provisioning. Now, provisioning directly related होता है to the NPA ratios. तो जैसे जैसे NPA ratios ज़्यादा होंगे, of course, provisioning expense will be higher. Now, one or two things to keep in mind about provisioning, which is very important, is that it is the most unpredictable and volatile element in the whole ROA tree या फिर income statement में. और उसका रीज़न ये है कि जनरली आप नेट इंटरेस्ट मार्जिन्स और कॉस्ट टू इनकम रेशियोज़ में बहुत ज़्यादा फ्लक्चुएशंस आप देखेंगे नहीं, एंड स्पेशली दे वोंट बी टोटली अनएक्सपेक्टेड, राइट. फॉर एग्जांपल, अगर कॉस्ट टू इनकम रेशियो अगर चेंज होने वाला है, सो यूजुअली द मैनेजमेंट विल गिव यू एन आइडिया, ओके वी आर एक्सपेंडिंग एंड देयरफॉर एक्सपेंस विल बी हायर. तो बहुत ज़्यादा अनप्रिडिक्टेबल नहीं होते हैं ये पहले दो ड्राइवर्स. लेकिन प्रोविजनिंग, बिकॉज NPAs कैन बी वेरी सरप्राइजिंग एंड समटाइम्स unpredictable, provisioning is a very volatile and unpredictable item, and therefore banks या फिर NBFCs that can maintain a relatively more stable NPA ratio will have a relatively more stable provisioning expense, which of course means more predictability. एंड ऐसे बैंक्स और NBFCs जो ज़्यादा प्रिडिक्टेबल हैं या ज़्यादा कंसिस्टेंट हैं, दे आर रिवॉर्डेड much more in the marketplace by investors versus those that are volatile, right? Especially in a business, in a finance business where you're borrowing and lending money, this is even more true, right? Where predictability counts for a lot. That is why you'll notice that the likes of HDFCs, the likes of Kotak, some of the very successful NBFCs as well, they have higher price to book ratios. I mean, there are other reasons also, but I mean, this is one of the most the key reasons why they generally command a higher valuation in the marketplace. So with that said, let's actually take a concrete example using Bandhan Bank. Bandhan Bank is very interesting to begin with because it is the only bank which earns ridiculously high net interest margins and ridiculously high ROAs, But uska reason hai, right? The reason why it usually earns high ROA, earns a higher ROA is because it is operating in a segment where it can charge say 16, 17, 18%. And the reason why it can charge that kind of interest rates is because it is catering to the bottom of the pyramid. Of course, क्योंकि interest rate ज़्यादा pay कर रहे हैं, it means they are also risky borrowers, and that's why. And that is exactly why, although ROAs are generally higher, it is also a kind of like a high risk, high reward kind of business, for Bandhan Bank specifically. और इसीलिए अगर अभी आपके सामने जो chart दिख रहा है, you can see that in just one quarter, अगर हम June 2021, and if you focus on the provisioning and contingencies line, you will see that in just one quarter in September 2021, provisioning increased from nearly 1460 crores to 5,500 crores in one quarter, and resulting in a loss of more than 3,000 crores. So that's a huge jump, and all of a sudden the bank ended up losing, I think it was roughly around 33% of the profits that it had earned in the last 5-6 years cumulatively, right? So that's a very interesting aspect about someone like Bandhan Bank. And because of that, because of this huge increase in NPAs, of course, ROAs were hit, and as you can see, ROAs literally crashed since 2020. So the fourth and final case study will talk about, or we will discuss, what is the relationship between ROA and ROE. We can kind of call this like part 2 of the ROA tree, because part 1 mein we just basically looked at the income statement और कैसे different factors were impacting the net profit and therefore ROA, right? In the second part of the ROA tree, we'll actually figure out the relationship between ROA and ROE, जिसके बारे में अभी तक हमने बिल्कुल बात नहीं की है. So the formula that links both these numbers together is ROE equals ROA into equity multiplier. ये इक्विटी मल्टीप्लायर जो वर्ड है, एक नंबर है, राइट? दिस इज ऑल्सो समटाइम्स नोन एज लेवरेज. नाउ ये क्या होता है, इसको समझ लेते हैं. नाउ फॉर अ बैंकिंग और फाइनेंस बिजनेस, not all of the money is its own money. Like, for example, promoters or whoever owns the bank, they don't put all of their own money to actually fund loans, right? The way it usually works is around 10 to 15 of the total जो assets हैं उसका 10 to 15% जो है वो equity होगी, promoters का अपना पैसा होगा, shareholders का अपना पैसा होगा, and the remaining will be borrowed money. right? But borrowing for a bank or NBFC can be in different forms, of course, like, current accounts, deposits, fixed deposits, debt. So there are different forms of borrowing, right? And the equity multiplier is a number that tells, basically is a ratio that tells the total assets divided by equity, what is that number, right? So that number can vary between 3, 5, 7, roughly in that range. For housing finance companies, that number can even go up to, say, even 8x, right? So 8 times the equity. So, but this number, equity leverage, of course, as you can see from the formula, कि जैसे जैसे equity multiplier ये number बढ़ेगा, of course ROE will also increase, as you can see from the formula on the screen. But this is a double-edged sword, because you can't continuously keep increasing leverage. जैसे तो मतलब मैं ROA सिर्फ 0.1% रखूँगा और leverage 50 or 100 times. But that's not very practical. I'm just talking about an extreme example. So there has to be a balance between the ROA and the equity multiplier itself. In fact, most of the times, a bank or an NBFC, whenever, and depending on their business model, they will have different limits or different different numbers for leverage that are considered to be okay and that are considered to be very high. So, for example, a housing finance company usually can borrow money from the National Housing Board, which is a government organization, National Housing Bank. That's a government organization that basically is responsible for implementing the housing policies of the government, right? तो कभी-कभी housing companies यहाँ से borrow करती हैं, and they can get long-term loans at reasonably low interest rates. So in order to get these loans, NHB imposes restrictions on these housing finance companies कि 5 से ज़्यादा या 6 से ज़्यादा leverage नहीं होना चाहिए. अगर ज़्यादा होगा तो of course sometimes they'll give you money, but they'll give you at a higher cost. So there has to be a balance between how much leverage you can take. Higher leverage, of course, increases ROE, but also increases the risk, right? Too low a leverage, right, will of course be considered very conservative, but then you won't get the ROE required for a shareholder to feel comfortable with their investment. So these are the considerations. This is the balance that we must be aware of. Now, coming to a concrete example, moving away from theory. So on your screen, you should be able to see this 5-year financial snapshot of a small NBFC called Csl Finance. Now, what type of loans does Csl? It basically funds small builder loans, right? For example, Delhi NCR में काफ़ी इनका a large part of their loan book is within Delhi NCR, and won't get into a bit too much of these details कि क्या loan से क्या नहीं. But if you actually look at their ROA numbers, you will be surprised and maybe even stunned, but ROA is like 7%, 7.6%, 7.92%, and finally in FY22, 8.45%. This is a ridiculously higher ROA number, right? But if you at the same time look at the ROE numbers, they have almost not crossed 12.5% in the last 5 years. So this is an extreme example of where the ROA is too high, but the leverage is not high enough to give you that 15% ROE kind of magic threshold, right? So I think, of course, based on investors' feedback, the management is aware that their leverage is too low and they must get the ROE numbers to around 15%, and they are working on the suggestions by investors, because again, as an investor, if I'm not getting 15% ROE on in the businesses that I'm investing in, I'm not very comfortable usually, right? So, and 15%, once they reach this 15% mark, it's a very important trigger point, which can also lead to the re-rating in the stock and therefore higher valuation and therefore a push in or a jump in the stock price, right? So in conclusion, basically what we have looked at is we've talked about ROA tree, and we have looked at what are the drivers of ROA, which is nothing more than a simple income statement, right? So what are those drivers? And then we looked at ROA in part 2 of the ROA tree and how ROA and ROE are linked together. So hopefully this video has been useful. If you're still watching, hopefully you like it, hopefully you found it useful. Please consider subscribing, and also leave comments if you have any feedback, any comments at all. And that's pretty much it. Thank you for watching.